you might be interested to hear this. If you look over the past 5 years, US stock indexes were up over 80%. But while the market's gone up, not all stocks have been a good investment. 36% of US stocks fell. That means if you were picking single names, you had more than a 1 out of 3 chance of selecting a loser. And of those stocks, the average drop was 52%.
Hello, darlings. And now it's time for your favorite part of the show, our Stacking Benjamin's Headlines.
Well, if you're new to the investing game, you've heard of exchange traded funds, or as OG and I call them, well, everybody calls them actually ETFs. But what are they? How do they work? And how can you use them well? Rachel Aguirre is here. She's managing director, head of US iShares product at BlackRock. Rachel, how are you?
Hi, I'm doing well. Thank you so much for having me. I have to say, I'm really excited to get to be with you today and talk about a topic that's really near and dear to my heart, which is ETFs.
Well, and as a guy who has iShares all over his portfolio, it's good to meet somebody on the team as well. But let's dive into this. Can we just do the 101 for people that are brand new, Rachel, to this investing game?
Absolutely.
What exactly is an exchange traded fund? What does that mean?
An exchange traded fund is really an amazing technology, if you will. It shares a number of characteristics with mutual funds, which I know many investors are very familiar with. It's a professionally managed portfolio of investments in the form of a fund, but it has a couple of really important distinctions to mutual funds. The first being liquidity, in the sense that it trades just like a stock, trades all day long on the stock exchange. So through buying a single ticker of an exchange traded fund, you get access to a professionally managed fund, but through the simplicity of just trading a stock.
And the difference, well, hold, I want to stop right there for a second, Rachel, because this is people often don't know this. The difference between that and a mutual fund is not then liquid all day, I assume.
That's exactly correct. There's no secondary market trading of mutual funds. So this liquidity advantage of ETFs is enormous, especially when you're in the midst of a very fast-moving market and want to be able to make decisions in terms of your allocation of investments. So really important distinction there. The second is transparency. Here, it's really all about the fact that ETFs on a daily basis, you get transparency into all of the holdings, everything that is held within the fund itself. And so you know what you're getting. And then lastly, tax efficiency. And this is something that's really important for investors to know. And this really kind of boils down to the underlying structure of the exchange traded fund itself that allows for investors to really control when those capital gains are realized, as opposed to, in a traditional mutual fund context, they're much more susceptible to paying out capital gains on an annual basis.
Yeah, it's funny you say that, because, and kind of timely, because as you know, coming up on the fourth quarter of the year here,
Absolutely.
We're looking at a lot of these mutual funds declaring capital gains.
That's right.
Do you mind? I know that your forte is ETFs, not mutual funds, but can you explain about why some people might be surprised with a mutual fund at the end of this year?
Yeah. Absolutely. It's really all a matter of timing. A lot of investors may think, well, hey, markets are down this year across the board. Why would my mutual fund be distributing a capital gain? But it really has to do with timing of when securities were bought and sold in that underlying fund. So it's very possible, and this is something that investors really should take a look at now. It's very possible that some of the mutual fund holdings may expect to see a capital gain distribution at the end of the year. And so that's something certainly to be aware of, and something that, from an ETF perspective, we believe is, a real benefit in terms of just the general tax efficiency of that structure.
Yeah. So to be clear, if I've held Microsoft since 2000, or if the mutual fund rather has held Microsoft since 2010, 12, 15, had this big run up, even though it's down this year, this is,
you could still see a gain.
Yeah. And this is not mutual funds being malicious or being mean to people. It's the way the product works. There's no real fair way for them to do it. And you're saying ETFs don't have that problem.
That's exactly right. You hit it on the head.
How do I evaluate then different ETFs that might be appropriate for my portfolio versus another one?
Great question. And I might even take a step back and just think about, what are the benefits of ETFs? I
Yeah.
think that's one thing to think about first before you even dive into one versus another. And, whether we're talking about a first time investor, really for all investors, I think there's two keys that hands down are the most important to remember. And the first is diversification and the importance of that. And I know this is a message that's been out there for, a really long time, but it's still just incredible to see the amount of assets that are held in individual stocks today. I recently came across a Cerulli study. There was estimated 4.2 trillion of end investor
Holy
assets
cow.
last year. Yes, exactly. That continue to be held in single stock positions and all of the risks that come with that. And you might be interested to hear this. If you look over the past 5 years, US stock indexes were up over 80%. But while the market's gone up, not all stocks have been a good investment. 36% of US stocks fell. That means if you were picking single names, you had more than a 1 out of 3 chance of selecting a loser. And of those stocks, the average drop was 52%. So, 1 in 3 stocks lost half their value during this period of time. So it would have been very easy to be a loser in what was otherwise very much a winning market. And so diversification is key to avoiding the situation. And that's the power of ETFs here. It's their simplicity, it's a single ticker. Just like as easy as it is to buy a stock, you can get access to very broad markets or themes. Um,
I could just
and
I could just imagine I
yeah,
could just imagine Rachel being at a fall cookout, maybe a tailgate with my friends, and I picked an individual stock that lost money. My friend across the grill from me with their hot dog hasn't even played the game
that's right.
and has had great returns by not even messing with it.
Absolutely. And I think the other thing that, investors can kind of fall into the trap of is trying to time the market. All too often, and you probably see this as well, and investors end up buying high and selling low. And it's not surprising because the markets can be an emotional roller coaster. But, the problem is that we're wired to have confidence when markets are soaring, and we start to feel really nervous and compelled to sell when they're falling. But both of these patterns really hurt investors. And it's incredibly difficult, even for the most experienced investors, to successfully time the market. And so, here the key to success is really about staying invested over the long term. Again, bringing it back to ETFs, we really see ETFs empowering an entirely new generation of investors to take control of their financial future, make those informed decisions, doing it in a tax efficient and low cost manner. So it's enabling them to invest for the long term and avoid a lot of those common mistakes.
In most markets, that's an important message, Rachel. I think with this year, with the markets all flipping over the place, it's an even
Mm,
more expensive or
absolutely.
more important lesson to stay invested.
Absolutely. I mean, I believe it's really in times like these that the value of ETFs just becomes, more apparent than ever. And, I say that, when I speak to clients and investors, they're looking to navigate through what are very troubled waters in the markets today, fast moving, quickly changing. And if you look at the iShares product lineup, we have 393 ETFs in our lineup. That's nearly 400 distinct tools that investors can use to navigate any market. And we've intentionally created that lineup exactly for that purpose. So if you have a view you want to express or a risk that you're concerned about that you want to manage, there's an ETF for that. Whether you're concerned about the impacts of inflation or maybe you're a retiree, you're looking for income, We have an ETF for that, and there's a lot of just a lot on the minds of investors right now.
Can we dive into that for a second? Because with that many ETFs, obviously a brand new investor could freak out. They look at the list of iShares. I mean, it's front and back, right? Of all these different things that they're looking at. For the new investor, probably sticking with broad-based indexes is a great place to start. But for
Absolutely.
people that are worried about the environment, I mean, I know that there are iShares that are really concerned with ESG, and I know that a lot of our listeners are concerned with ESG.
Yeah, I mean, that's certainly been one theme that we've seen. There is a lot on the minds of investors right now. And, I would say there's really three overarching themes that we're seeing playing out in terms of what we're hearing from clients and investors. And, the first one is inflation. It's clearly top of mind. And it's been a challenge, but what I'd point out here is that it's also creating investment opportunities in the area of thematics. And this is something that we really are trying to get the message out on and make investors aware of. We have a lineup of thematic ETFs, which we refer to as megatrends. And these products are really looking to identify whether it's regulatory or societal or shifts in technology that have the power to really create some very compelling investment opportunities. And you can see that lineup, on our website, and it's well known. But when we think about these shifts that are taking place, it's really been regulatory forces that have come into play here. You may have heard, I know many people have heard about the recent passage of the Inflation Reduction Act. And that's really become a catalyst for themes like clean energy
Mm-hmm.
and infrastructure. And we have products that are designed to give investors exposure to that entire value chain of a theme, whether through our US infrastructure ETF or our global clean energy ETF. You can actually turn what is a challenge into an investment opportunity.
Yeah, I know that the water issue has been one that's been
Mhm.
on our mind, and I've been invested in your water theme for quite a while. I want to dive into a story we did a few weeks ago that was considerably more nerdy, and it's about
Mm.
the starting in July we saw some of these single stock ETFs. And I know that
Oh, yeah.
it looks exciting, Rachel, to a new investor. It looks like, hey, it's an ETF. Rachel said that ETFs can be safer and diversified. There are
Mm,
some ETFs out
mhm,
there that are really playing a different game. Can you speak to
mhm,
those for a second?
mhm. Absolutely. It's such an important point that you bring up. It is important that you understand what's under the hood of a given ETF. Not all ETFs are the same. And we've actually, really advocated and championed over time for the need for greater classification of ETFs so people understand what it is that they're
Yeah.
buying. But, the power of transparency of ETFs is that you can take control and you are empowered to see what is under the hood, what is actually held. And I'd go back to, the point around diversification. One of the great benefits of ETFs, particularly when we're looking at those broad markets, is you're getting access to a diverse portfolio. But to your point, not all ETFs are alike. And so it is important to do that due diligence, ahead of making a purchase. Really understand what you're buying.
I bet this is crazy, but I bet you know a place where there might be more resources people can go to so that they can learn even more about ETFs, Rachel.
Absolutely. I mean, there's so many different ways. Of course, we have iShares.com. There's a wealth of information available there. Um, Many investors, I would say, reach out to your, financial advisors as well, to the extent that you have that. And they're, also just a wealth of information here. But either way, we're really champions of, creating that transparent investor progress in the context of ETFs.
Well, you know that I'm here in Mom's basement. Nobody listens to the show. Is there anything secret that's coming up that you could tell our Stacking
Oh my
Benjamins
goodness.
family, some excitement that maybe we could break here before anywhere else?
Oh my goodness. Well, I'll just say we are so excited about, what we see as the next frontiers of product innovation. And what I'd share with your listeners is When we think about product innovation, we're really focused on keeping clients, keeping investors, your everyday person at the center of innovation. And so we're constantly looking at new ways we can address investor needs, solve challenges through our ETF offerings. So, whether those be products of new compelling themes or solutions for income, this is what we're looking to achieve. So stay tuned. There's much more to come in the area of product innovation. We're really excited about it.
More generic, Rachel, than I was hoping for. Actually, it was exactly what I was expecting. But you can call me. Just call me when you're ready to talk. Give me a call and we'll do this again.
Awesome.
Rachel, thanks so much for hanging out with me for a few minutes and explaining ETFs to our family. By the way, we'll have links to iShares and everything Rachel talked about at our show notes page at stackingbenjamins.com. Rachel, thanks a ton.
Thank you so much.